Hi everyone, today's Wednesday, September 17th. The market closed a little while ago. Before we start today's video, just a housekeeping note. We did have our Instagram account try to be scammed, and they created a fake account, so it's trying to solicit followers. So if you see it, just ignore it and block it and report it if you can. They spell the name Parisii Gray, so that's not us. Anyway, so the other housekeeping note is we're going to do another video for our Financial Academy on our website. We haven't done one of those in a while. This one will be fun. It's going to basically be outlining the most guaranteed way to get rich, if that's what you're trying to do, and if you already are wealthy, how to stay that way. So we'll have some fun with that. That'll be coming out hopefully this week. On to the markets. So I've got a full whiteboard of notes as usual. I want to go through it here. Things are working out great this year. 2025, as we predicted kind of in our first video back in January, working out exactly to script. So we've got a good beat on things. We basically said, just repeating where we are in the story, we basically said the year would have an upward bias. We kind of thought an 8 to 12% gain, and the only reason it wouldn't be any more than that would be because we had 24% each of the last 2 years. So that's just, too much, and the market started the year with a very high valuation. In our June 26th video, a few months ago, we turned our thing from not being mildly bullish, but that it would be quite bullish heading into the second half of the year as we approach 2026 and into 2026. In fact, we had said that all of the gains would come in the second half of the year as the market was corrective in nature in the first 6 months. And sure enough, we got a 22% correction from January 1st until the April low, which was on the 7th of April. So, and then the market's up something like 35% since then. It's been one of the strongest bull runs I've seen in my career. And, I feel more optimistic and positive about the outlook of the market for the next year or two than I have since the 1990s and the last time we were in a bit of a tech run. We are not in a bubble now. There are real earnings in all of these companies. Some of them are making profits of $20 billion a year, and we've got all of them covered, and we'll kind of hit the sectors in a minute. The Fed today, the big news this week is the Fed did go ahead and cut rates again for the first time in quite a while, since last year, I think December, so it's been about 9 months. They cut 25 basis points. We were saying from day one as the year started, we thought that they would cut 2 to 3, and then kind of somewhere around June, we said we'd change it now officially. We believe in 3. Today, the dot plot showed that it does look like we're going to get this cut plus 2 more, so it looks like they are going to do 3 cuts. The labor market, the unemployment rate creeping up, labor's gotten really weak, so we think the Fed kind of has to go. It's been controversial because the Fed's been saying that they're worried about inflation due to tariffs, but we never felt tariffs were inflationary. We thought tariffs are a tax. So if a good costs something, $10 and they put a $1 tariff on it, then that item now costs $11, but that has nothing to do with, the price of money and money flows and all of that. Put it this way, if the Fed, if lowering rates stimulates the economy and can cause inflation, and raising rates slows the economy down and drops inflation. If right now with tariffs in place, the Fed were to switch gears and raise rates, I got news for you, prices would still be higher due to tariffs. So that just shows that the interest rate policy has nothing to do with it. They have a dual mandate. Inflation is tame. It's right around 3%, 2.8, 3.1, depending on what metric you look at. Some are down even lower, like 2.5. If you take out, real estate and put in real time, some people say it's more like 1.8% CPI. So inflation to us is tame. They're all worried about it now, been very reluctant to cut rates, but when inflation was 5, 6, 7%, they were sitting on their hands and weren't panicking then. So now they're, we just think they're just, they're just not looking at it the right way. But what do we know, right? So anyway, we got our cut today. This reemphasizes our bullish posture. So it is September 17th. The weakest month of the year historically is September. That being said, 2 weeks into the month, we're up almost 4% for the month. That annualizes out to a very strong year in stocks. So we're up 4% here, but the worst part of September of that month are the last 2 weeks. So we're just starting those now. And given the fact that the market ran up so strong into this Fed cut, and then we got the cut and the market traded off a little bit, that means they're buying the rumor. And once the news comes out, they sell the news. But that dip, we want to buy that pullback. So we want to get through the next 2 weeks of September. October is the most volatile month historically. That's when all the crashes and the panics happen. Crash of 29, crash of 87, 1998, 1997, 2022. Like these things all kind of happen. They bottom in October and then they V-bottom up. So if we do get that, we are going to probably be buying pretty heavily in here. And again, we'll see what's going on in the world when that actually happens. But if we can get through the next month unscathed, then we hit the November through January time period, which is historically the strongest season. It's my favorite time to be an investor. Tax selling is pretty much done. And, I think we know the sectors to be in. And we're in about 5 or 6 sectors right now, just reviewing them really quick. We're in artificial intelligence in 2 components: the hardware, so the people that manufacture the chips, semiconductor manufacturing equipment, switches, routers, right? All the stuff that is connecting together the data centers that are being built out by the biggest corporations in the world, and they can't buy enough of these chips. And then the software, where it's actually delivering the artificial intelligence to businesses, governments, consumers, and we have investments there on the software side. We believe strongly in robotics. Mainly, we're playing that through Tesla. Tesla cannot be viewed as a car company. If you do that, as we've been saying, it's like looking at Amazon back in the 90s as a bookstore. And if you put $10,000 in Amazon back then, it's worth $20 million today. So, we think Tesla has the same dynamics in there. You can't be looking at it as a car company. Although in August they had their highest month in maybe ever, but certainly in a very long time, and a lot of that happening in China. On top of that, Elon Musk just bought $1 billion of stock himself. We get excited around here when you see a CEO buy 10 or 20 million. I've never seen one buy 100 million, and I've certainly never seen someone buy $1 billion. But the stock's been on a tear leading up into that, and after that, the market feels real confidence that he's back focused on Tesla. They believe the Optimus robot that they're creating, that's the real reason we're in is for robotics. Your car is going to become a robot. The Optimus robot, they are now, and I think it's why I bought all the stock, it is now coming to the conclusion of most market experts that Optimus could be the #1 selling product of all time. I don't know what it is today. Maybe it's the Apple iPhone. I don't know. But Optimus, every business, every consumer, eventually in the next 20 years, everyone's going to own one of these things. So it's kind of exciting. We're big on cybersecurity, because as artificial intelligence and technology builds out, we're going to need all the infrastructure, the walls up that'll protect our information. We're big in space. We've got, besides SpaceX, we have positioned in a lot of accounts. We're playing it in another company. We're not going to announce it yet. And then defense and military, again, more AI work with drones, so that it's not going to be humans or tanks going into battle. It's going to be humanless drones going in as weapons. And then crypto, there's a lot going on there. Not Bitcoin or some of the coins. We're talking about Wall Street and the financial system through the Genius Act and through stable coins is going to be moving more toward the blockchain. And there's a couple of companies that are positioned right in the bullseye to take advantage of all of that. And we started building positions in that. Our core 20 portfolio continues to do great. We are moving it to core 24. We did two of the stocks today or this week. We're not revealing the names anymore because we want to make sure they're in place with our clients before we give them out to the public. But our core 20 year to date, we run it every Monday morning. So as of this Monday, a couple days ago, for Friday's close, the portfolio was up just over 17% on those 20 stocks. The S&P 500 is up 12. So that's 5 percentage points over 8.5 months. That annualizes out to a 7 percentage point advantage over the S&P 500, which is quite strong. 700 basis points or 7 percentage points. That's great. 7,000, I think it is, basis points. So we're happy with that. Some of our stocks in that portfolio are a little controversial. Names like Tesla, names like Palantir. The Palantir is our strongest performer, up about 120%, 500% in the last year. We've been in it for a few years. That stock, it was maybe a month and a half ago, a famous short seller came out and said he had bet against the stock. The stock went from $190. You could have bought that stock at $25, a year ago. It went from $190 a share down to about $48 or $49 a share. It was a guy named Andrew Left, and if you want to know who's Andrew Left betting against the company, the stock has now rebounded from 149 back up to 170. So, again, sitting on a 120% gain for the year. But that Andrew Left guy, if you go to, I think it's on Netflix or one of these streaming services, the movie Dumb Money, which is a nice movie. It's a fun movie to watch if you're involved in the market, but it's about the whole GameStop short squeeze. Well, Andrew Left, if you watch it, he doesn't come in looking very good at when that movie's over. And, to know that's the guy who's betting against one of our favorite stocks, it doesn't bother us at all. So, and then the last sector we're kind of focused in is small caps. Small caps have really lagged. They're only up about 8 or 9% for the year versus 12% for the large cap market, the S&P. But since the August 7th low, they're up 33%. I think the S&P is up 32%. So with the prospects of the Fed lowering rates, that's very bullish for small caps. We're holding those positions. We think they're going to be great for the next year. So in conclusion, we'll wrap this up. It's been a solid year for us in terms of what we thought was going to happen is playing out again. We're heading into pretty much our final quarter here in the next few weeks, and we just got to get through the next, I would say, month month and a half, get through tax selling season, and then we move into the strongest time of the year, November through January. And knock on wood, but if what we're seeing is happening, it could be quite a strong market. We are very overbought. The valuations are very high. There is so much capital around the globe chasing very few assets. So you're seeing gold, stocks, bonds, crypto, everything's got a bid to it. There is not enough assets for the amount of wealth that's sloshing around the globe right now. So valuations are somewhat justified. That being said, because of that, it can create air pockets. When a stock or an asset is not trading on a foundation of earnings, it's trading on expectations, then there become air pockets in the market. You can see quite violent corrections in either individual names or in the market as a whole. We do think it's all merited, so that we want to be in position with the cash that we have or raised to be buying any dips that we see in the next 5 weeks. But we think that from November, end of October into the end of the year, into 2026 could be really exciting for stock investors. In fact, given what's going on with the Fed, that there was a new Trump appointee, Steve Moran, he wanted the Fed to cut 50 this meeting, and he thinks they should cut 75 as Trump starts to have his way and get more and more Fed governors in there, and Powell going out in May. We think the Fed is going to lower rates dramatically, which could make housing more affordable, which is positive for you and me, but it could also take the stock market to quite a frothy, really speculative bubble, which if you're positioned correctly could be a big win. So we got to stay on top of it and monitor it. Hope this was helpful. Look for our next video on how to get rich, and we'll talk to you soon in the next video. Have a great night, everyone. Thank you.